Welcome everyone, Simply Bitcoin. We break down the news from Twitter, the daily fail, meme review, software releases, hardware releases, the websites by plebes or plebs. Drop us a like, subscribe. Return guest and fellow Bitcoiner, Erasmus, is joining us, and we are going to chat a little bit later, but you know where we're going, and if you don't, I'm going to tell you. We're going to check the numbers. Let's do it.
Number time.
At the time of this recording, the block height is 695,470. The Bitcoin price, 44,270. Chain rewrite days, 1,028. Total public lightning capacity, 2,257.50. Sats per dollar, 2,257. Isn't that weird? Anyways, I feel like I'm reading the same numbers over and over. Anyways, blocks to halving. Should say halvening. Now we're going to start an argument. Anyways, blocks to halving, 144,530.
Dude, I'm going to keep saying it, man.
I think it's the halvening. I don't care. I think it sounds so much better. It's just like, forget it. It's all about the style of it. The halvening, yeah, so someone's going to think it sounds, totally idiotic, and that's perfectly fine, but I just think it sounds better.
Dude, I say the halving.
I think it's the halvening.
We can't be friends anymore.
That's okay. This is a hill worth dying on.
Oh my god. Okay. Anyways, okay, but no, but I'm gonna keep reiterating what I've been saying, Phil. Dude, look, the Lightning Network keeps crawling up. They keep literally, bro. Every single day it goes higher, man.
Isn't it weird how the lightning capacity is what's it called? It was the same as, actually just changed now for the sats per dollar. It just changed to 2,258. But the total public lightning capacity was the same number as the sats per dollar.
It's a sign.
That's weird.
That was a sign. That was a sign.
That was serendipitous.
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 Serendipitous. Blah, blah, blah. I can't even. Okay. Anyways, Phil, it's time for it.
The daily fail. You know what? I talked about this. He was a fail a couple of weeks ago, right? I showed the tweets of him asking Richard Hart, for money. Anyways, let's dive into this. Alex Saunders, crypto influencer, Nuggets News. That's the news outlet that he owns. And is the CEO. There you go. Alex Saunders accused of not being able to repay followers. Yeah. See, this is where it gets cringe, right? When you start asking your followers to invest in terrible projects. Anyways, let's dive into this. An Australian cryptocurrency influencer has been accused of not yet being able to repay significant sums of money in digital currencies. Founder and CEO of Nuggets News, which has 140,000 subscribers on YouTube and also provides a fee-based service. Don't get me wrong, but you know the joke, right? When paid group? Yeah. When paid group. Anyways, the company, which was founded in 2017 by Mr. Saunders, promotes itself as a digital media channel that delivers unfiltered coverage of the latest developments in cryptocurrency, housing, precious metals, commodity stocks, and other financial markets. Man, he's like a 7-Eleven of investments, man. You just show up and you just, you take your pick. Anyways, Mr. Saunders asks people to invest in a so far unrealized crypto project called Decentra Bank, or Decentral Bank, DCB. I remember there was a shitcoin called Decentraland where you could, quote unquote, buy virtual land.
I remember that. I remember that.
That was interesting. Like the price is going to go up on virtual land that you can create on the fly over and over again. We're going to keep going on this. So here we go. We've got the shitcoin. We've got the paid group. It's a win. It's a winner in the making. Anyways, another tech company mentioned by Mr. Saunders, Block 8, said it was not involved in DCB and was currently seeking legal advice regarding Mr. Saunders' claims. Because you see, what happened was that he actually claimed that there were developers that were involved in the project and there were certain companies that were involved in the project, which, as we just saw, that is not the case. So these companies have now started to, and these people have now started to fight back, An overseas hedge fund manager the ABC spoke to said he sent Mr. Saunders Bitcoin in January, which has not yet been paid back. Okay, so look, this story just goes on, with another developer that was also mentioned that actually had nothing to do with the project, but he was touted by Alex Saunders as being in the project and being, very, vocal. Anyways, it's total trash. You got to be really careful. These guys, these shitcoin shills, at the end of the day, these projects, I've told you this, you can go create a token for 25 bucks. Okay? That's how easily it is to mint a shitcoin. Okay? It costs absolutely nothing. No one needs this thing. It does not need to be money. It's just insane. And these poor people that want to believe in, look, I know how it feels, right? Like people feel overwhelmed. You know, there's all this information, you know, people feel insecure. Not everybody knows everything. So it's easy to fall and turn to these people that look like they have an idea. They don't have a freaking clue. You know what I mean? Like we're all just human, you know, like everyone's just doing their own research. The people that want to pretend that they have a clue, those are the ones you need to be afraid of. The ones that tell you that they absolutely have the answer, that's what you need to be afraid of, okay? So that's why we always suggest that you go and do your own research.
Absolutely. And, you know, the old Bitcoin adage, you know, everyone's a scammer. And I just want to go back to this point, you know, because there's plenty of shitcoin channels on YouTube that have a tremendous following and they grow incredibly quickly. Right. And the reason for that, right, is they sell hopium, right? They'll tell you this is where this price, this is where this shitcoin's going to go. It's going to 100x, you know, and they're going to continue selling that hope. Right. And that is specifically why we don't talk about price on this channel. The only time we talk about price is just to read the price at the time of the recording. But we don't speculate, and we don't speculate on purpose because we're not here to try to sell you hopium or this false illusion. What we're trying to tell you is we're trying to tell you the news, the fails from the eyes of Bitcoiners. And you'll find the truth on its own because Bitcoin is truth. Bitcoin is anchored to the truth, right? So yeah, man, look, Phil and I have discussed this at length. If we use the same methods of, you know, the flashy thumbnails saying Bitcoin's gonna hit 200K, this channel would have over 100,000 subscribers already, you know, but that's not the case. We decided to take the narrow path, you know, and that is focusing on the signal rather than all the BS hopium noise. Anyways, Erasmus, thoughts?
Well, you are absolutely right. The cleanness of the BTC project, the so-called virgin origins of it, has not been equaled or emulated by anyone so far. Therefore, you have to be highly suspect of people that owns the printing machine, because that's what you have in all those altcoins. They're owned by someone. There is a corporation somewhere. That's not what Bitcoin is about. It's all about. So yes, the natural reaction to any of these projects has to be highly suspect, not because the people is necessarily dishonest, but human nature is greed, is basically driven by the avarice, and that always ends up controlling the whole idea. As much as their ideals could be nice in the beginning, as long as any of these coins is not fully 100% decentralized and not owned by anyone, to me, they're all tainted.
Absolutely. And you know, and you see that throughout history as well, right? You know, I'm going to go back to the Bretton Woods, right? Where, you know, the US dollar was literally pegged to gold, right? And it's like I've always said, right, many times on the show, even with the best intentions, eventually the monetary policy gets corrupted by humans over the decades, right? And I think that's exactly what Erasmus was touching on. And that's exactly what these shitcoins do. You're replacing the legacy shit system with a kid in his underwear. That's the money printer instead of the Fed, right? So anyways, but Phil, it's time for
the Daily Meme Review, sponsored by
Citadel 21. The meme for today is not really a meme. Sometimes we cover news articles or images or very effective or very, you know, I guess, images that really represent what's going on with the world, right? And when I saw this, I had to take a screenshot of it. It's absolutely bonkers, okay? This is by the New York Times, the so-called paper of record, right? It literally says, it's an opinion piece, it says, "Don't go down the rabbit hole. Critical thinking, as we're taught to do it, isn't helping in the fight against misinformation." Sounds very 1984-ish. Anyways, just wanted to point that out. But let's get to the meme for today. And this is by RD, one of the meme lords, right? And this is Senator Shelby of Alabama, and he was the only senator that essentially declined the amendment to essentially fix the language of broker, right? That was put in last minute into the infrastructure bill, you know, that was influenced by the Treasury. But anyways, back in my day, you can rent seek for 6 terms, know shit about fuck, take bribes from the banks, stifle innovation, and nobody could do anything about it. And I guess the caretaker, that was before the Bitcoin standard, Grandpa.
It's funny it says grandma.
Grandma, dude. Shout out to RD, but you messed up because you tagged Senator Schumer and not Senator Shelby. Anyways, but other than that, it was a great meme. And in honor of our new sponsor, Citadel 21, I'm going to give it this very special score of Volume 1 of Citadel 21. There's only 1,000 of these, and I got one. What about you, Phil?
Touché. Very nice. Yeah, I've got mine upstairs. Maybe I got to bring some down. Those are good score ratings, actually. Anyways, okay. I am going to give it, thought it was a great meme. That first one is just funny and scary all at the same time, right? You're laughing, but deep inside we're crying. But to RD's meme, I am going to give it this Gen 1 Casanode case.
Ooh.
Right.
Dude, I got one of those. I got suckered into getting one of those.
The first gen, and then I learned about Raspy Blitz, and I was like, damn it.
Oh man, dude,
Yeah.
they really messed up. They didn't make it open source. That's where Casa, I think, dropped the ball, man. But anyways, Erasmus, what would you give that meme?
I have to describe it, of course, because you're not seeing me. But imagine a Florida Gators blue cap is falling to pieces, is ragged, is old, like the senator, the retiring senator you just showed. But it has a Bitcoin logo in the center that is bright, shiny, and orange.
Ooh, okay. I'm gonna have fun in post trying to make that a reality.
I like the picture he's painting.
I know, right? I'm just trying to figure out how I'm gonna make it happen.
Yeah, exactly.
Anyways, guys, do you agree with our scores? Do you disagree? Let us know down in the comments. And of course, join our Telegram group. Drop us some links to memes so that we can review them, because it's a meme review and we review memes. But anyways, Phil, it's time for
the Daily News, sponsored by
Crypto Cloaks.
So tell me about the Strike app and what differentiates it from a lot of the other payment and wallet apps. I know you guys have had some news lately about maybe helping people get Bitcoin off the app more easily. I know you're trying to do lower fees even for purchasing or transacting in Bitcoin than rivals like Coinbase. Where is this going, and what's the use case for people who may not have experienced it yet?
Yeah, so at Strike, we think that the Bitcoin network is the world's best monetary network, and it's not even close. The Bitcoin network is one of the more powerful innovations for money as a technology in human history. And so similar to the PayPal network or the Visa network or the Square monetary network, we operate on top of the Bitcoin monetary network. We are a native neobank, like a Chime, like a Venmo, like a Cash App, but under the hood, we use Bitcoin. It allows us to do everything cheaper, faster, more global, and better. And so you're talking about a network that can achieve bare instrument cash finality anywhere in the world, 24/7, 365. It is the most inclusive monetary network of all time. And so that's where our innovation lies. And so with us rolling out products like being the cheapest place in America to buy Bitcoin, we are taking a direct shot at those that are wasting resources on supporting other altcoins, coins, because we think the true innovation is a global, unified, singular, open source payment standard for the world. And that's where we spend our time and resources.
So that was, Jack Ballers, like I like to say. And yes, he really did just say shitcoin on live TV on CNBC, right? And, Jack really understands the Bitcoin, the Bitcoin ethos, right? And he just did a shot across the bow, just giving a big middle finger to Brian Armstrong for him, completely missing the ball. He created essentially a shitcoin casino rather than leveraging, the power of the Bitcoin network. And if you just put like the Bitcoin currency aside, what Jack was saying is that the network itself, you could build stuff on top of that, and it's much more efficient, inclusive, and inexpensive than the legacy system. And this is exactly why Janet Yellen and Christine Lagarde, the European Central Bank, and the IMF, right, were so hostile against it, because they know that it's an escape valve. They know that there's no possible way that they can implement a central bank digital currency the way that they're envisioning it, as long as there is this, literally, there's this parallel monetary system that's completely autonomous, that supports itself, and that has much better incentives than anything they have to offer. You know, so it's incredible. You know, it's incredible to see that, and I could have never have imagined, you know, the word shitcoin just being dropped out nonchalant on CNBC 5 years ago. Jack would have never been invited back on CNBC anymore. Now you see, right, this kid in a hoodie wearing whatever he wants, because that is the power of Bitcoin. Unlike fiat, right, where you have to wear a suit essentially because there is trust involved. In Bitcoin, it's trustless. So it's a completely different system. It's revolutionary, man, and I just wanted to play that clip. Phil?
Love that clip. We're trust minimized. I always got to keep saying, because I do the same thing. I always say trustless, and then I'm like, it's trust minimized. But look, this is really, you know, this is absolutely game changing, right? I don't think people really understand the ease of use with Strike. I think that it's going to, I mean, look, it's, okay, number one, you don't need the shitcoin casinos to go and get your Bitcoin. You never really needed the shitcoin casinos anyways to get your Bitcoin, right? But they always want to make you think that you had to. So now we have like an equal player that offers a much easier user experience to get Bitcoin only, you know? So yeah, and definitely to your point about Brian Armstrong, I mean, look, I understand that he's fiat rich and all that, but he had a chance to be a part of something actually better, and to provide, you know, and to provide positivity into the space. And instead, he just decided to bring a circus of shitcoins to rip people off. Absolutely. So, you know, like, Jack Mallers just makes him look way worse. It's like, if he didn't look bad already, like, he looks even worse now.
And he completely destroys the Coinbase business model as
oh
Jack
my God,
pointed
yeah.
out. Because essentially what Coinbase does is that they subsidize, right, essentially they subsidize the selling of shitcoins, right, in order to bring more people in. Right, but the way they do that is with their fees. What Jack did is make the fees near zero. So essentially, you know, why the hell are you going to use Coinbase? And Coinbase isn't going to have a choice but to lower their fees. But when they lower their fees, they're not going to be able to subsidize all that shitcoin education and selling all those shitcoins in the first place, right? So smart move from Jack. But Erasmus, do you have a different take on this?
No, I agree 100%. I think that the future of Bitcoin lies on layers upon layers of technology that will be built up on top of it and will enhance the network as a whole. The move that he made reminds me of what happened in China with eBay. eBay was the first auction online platform and dominated the market until Taobao, which is part of the Alibaba group, basically came and said, we're not going to charge any fees. So they just upended and turned the eBay model, which has not changed to this day, completely. And in a matter of 6 months, I think, they took over the market. Exactly the same scenario that you see here.
Because they lowered their fees and eBay had to keep their fees up, is what you're saying.
They eliminated fees from the auction online model.
Okay, I understand. Interesting. Very interesting. But anyways, guys, we've described, or I hope that video, you know, shows you hope, right? It paints a picture of a better world, right? You know, a world on a Bitcoin standard. But we brought Erasmus today to kind of break down exactly what's happening in the fiat world, right? And I think that once you hear this, right, you're going to be even more incentivized to get on that orange life raft while the Titanic keeps sinking. But anyways, let me pull up, you know, our favorite chart that we like to show on this show. The M1 money supply. Woohoo! And of course, this is 2020. This chart goes back all the way to 1959. And in 2020, they absolutely lost their freaking minds and they're just printing into oblivion. But Erasmus pointed this article out to me, and it looks like all that money printing isn't having the same oomph as it used to. Anyways, let's check out the article. Liquidity is evaporating even before Fed taper hits market. Gap between money supply growth and GDP is now below zero. Negative readings in last decade spell trouble for S&P 500. Right? So even with all the goddamn money printing, looks like the stock market isn't increasing as much anymore. Anyways, to continue the article, put another way, the recovering economy is now drinking from a punch bowl that the stock market once had all to itself. How big is this? How big a threat is this? While stocks kept rising during frequent negative marche, I can't read that, Phil. What does that say?
English, motherfucker, do you speak it?
Marshallian K readings in the 1990s.
Thank you, Phil. Appreciate it. The pattern since the 2008 global financial crisis, a period when the central bank was in what Ramsey calls a perpetual crisis mode, begs for caution. Right? So, look, the way that I see it, and again, Phil and I are Bitcoiners, so we understand the Bitcoin world. I guess it's much easier to understand, right? Every 10 minutes, there's a block, but in fiat, it's all like this, and this is exactly why we bought Erasmus. Erasmus, my understanding from that article is that all this QE isn't having as much effect or as much stimulus effect as it used to.
So it's signaling the same as it did in the 2008 crisis, way ahead of time. So why is this happening? Well, at this moment, the best educated guess that we can point out to is that in the past, and you just read it in the article, the QE money, which is essentially a central bank buying bonds, municipal debt, and corporate debt from the market, benefited who? Well, basically Wall Street, right? Because they were the holders. They are the holders of these titles. But starting in the spring of last year, QE went from a monetary tool, which is very dangerous, into a fiscal monetary tool. Why? Because starting with the stimulus that was approved by Congress in the spring of last year, the fiscal authority started using the QE process indirectly. Very troubling. But again, we're dealing like with an addict. You take the drug supply from the addict and you get trouble. You have withdrawals, right? And that's what I'm afraid the US economy may face in a couple of quarters from now.
So essentially what you're saying is that the economy is addicted to this exponential printing of money, right? But at the same time, that even though we continue to print money at the rate we're printing, it's having less and less effect stimulating the economy?
Let me put it to you in even simpler terms. What I'm saying is that the QE mechanism of buying bonds from the financial
Wait, and let me stop you right there too about this concept of bonds, because Ray Dalio and Max Kaiser recently said, Ray says bonds are essentially useless. So like, not only can they not sell these bonds to raise money on, not only could they not sell these bonds to raise the money that they need, right? Bonds are essentially worthless now too. Right, so this is like a double crap situation, because they're selling worthless bonds to themselves and they're acting if these bonds actually have value in the first place.
Yes. Well, U.S. Treasuries are considered the safest financial instrument in the world. Go figure that out, right? But let's clarify things, okay? Since last year, that went beyond that function into buying indirectly the bonds issued for these stimulus packages. At that moment is when I think our politicians lost shame in terms of issuing money indiscriminately beyond what the Fed had been doing.
And you know what? That makes perfect sense, right? Because look at all these, these packages, right? Biden, wants to pass $3.5 million, social/infrastructure package, and no one's asking where's that money coming from, right? Because technically, back in the day, you would have to sell the bonds to the open market to raise that money, right? But now, exactly what Erasmus was describing is essentially, not only are they not selling the bonds to the open market, they're selling the bonds to the Fed themselves, and they're selling essentially worthless bonds because no one wants to buy them in the first place. And now this is where I'm going to just tie this up and I'm going to pass it on to Phil. It's only a matter of time, right, until governments start to figure out that it's just much better holding Bitcoin than U.S. bonds, right? You already see this in Japan. Japan recently announced that their sovereign wealth fund was going to taper down the buying of U.S. bonds. And in Russia, they're dropping the dollar altogether, right? So you're already starting to see this in slow motion. Phil, thoughts?
Yeah, man. You know what? It just got me thinking. I remember way back in 2008, and I remember the first TARP, the whole first TARP situation. And I remember how much, back then they were trying really hard. They were acting really hard. They were selling it to the public. They were really selling it to the public. But now we've gotten to the point where all we do is watch them bicker over essentially which rich friend gets paid out in this package. That's essentially what we've come to. They don't even try anymore to lie to us. There's no point. Like, now they just right out in the open just say, all right, we're producing this package and this is what's going to be in it, and these are all the people that are going to get it. And then we watch this fake little charade of, I kid you not, it's like watching actors, like this little charade of, oh no, we can't put this in. You need to think about the people. And what about it doesn't matter.
It's all
different.
It's all horse and pony show, dude. Like we were discussing that. And same with the infrastructure bill, dude. And this is why this is why they snuck in, this provision that was literally put there by the Treasury, right? And they specifically got senators that were going to retire next election to include it in the bill or to vote against the amendment. Man, it's absurd.
When did the Treasury become capable of putting stuff in bills?
That's the
when does that even happen? Like, I don't even understand that.
It's not even part of their purview, man. Like it's like they're part of they're the executive branch, right? They're part of the executive branch, and that's the legislative branch. But it's like now you're seeing this commingling, and I suspect, right? And this is what the concept that we talked about yesterday, Phil. Mm-hmm. I think that once the money starts being disconnected from reality more and more and more and more, right? You start to see the moral decay of society. Why? Because fiat is literally based on lies, right? You see Jack Mallers, you see that interview that he did, right? Where he's just talking and all you feel like is hope. You feel hope for the future. You feel, you don't feel nihilistic, right? So that's like another concept that, that's crazy in the fiat world. And you see this, people saving in fiat, they tend to actually be psychologically more depressed, and they should be, because they're slowly losing value. And then people that save in Bitcoin, all of a sudden they have hope for the future because they know that their money isn't going to be debased. We need to separate the money from state, right? And we need to go back to a hard money standard, right? And we need to incentivize again, because now banks are just like, they're de-incentivizing you to save. They want you to spend because that's how their system works, right? We need to go back to a hard money standard where you're incentivized to save for a better future.
But I'm sorry, Erasmus. I just want to quickly add one thing to what Nico was saying. Also, in constantly encouraging us to spend, it also helps in us not noticing the devaluation of the money as quickly as it's happening, right? That's another reason why we have to spend it that quickly.
Guys, keep this in mind. The reason why you see these politicians basically proposing bigger and bigger stimulus packages for bonds to be issued that theoretically don't have buyers is because they have crossed this line. And it looks from this analysis that we looked at in the beginning, the Marshallian K, that not all the money in the world will be enough to deal with the lack of liquidity. Just imagine when they start tapering down the purchases of bonds early next year.
They can't. They can't. And look, and just to tie this up, the news segment, and to go back to what Erasmus was saying, from my perspective, right? This is just history repeating itself. Right? You have money built from the beginning, the Bretton Woods Agreement, hard money standard, dollars pegged to golds, right? Then, a couple years pass, right? 1949 to 1971, Richard Nixon took us off the gold standard. Not that many people noticed. And then slowly but surely, right, the system started getting eroded over time. And then it was last year, how Erasmus pointed out, where, eventually they just figured out, listen, if the money isn't tied to anything, what's stopping us from just printing it like never before to pay for any crazy ideas we want as policies, right? So yeah, man, break the cycle, buy yourself some Bitcoin, and man, let's win this battle for freedom. But anyways, Phil, there was a software release today. Why don't you tell everybody about it?
Software releases. All right, we've got the Trezor Suite version 21.8.1 that was released. It's a desktop app to connect with your Trezor hardware wallet that keeps your Bitcoin in super uber icy cold storage. I'm feeling chilly just thinking about it.
I just write stuff for Phil to read. It's hilarious. Anyways, guys, before we go, I want to give a shout out to our awesome guest. His name is Erasmus. Definitely subscribe to his Substack if you kind of want to understand how the fiat system works, because Phil and I can't explain it to you, so we always turn to Erasmus to break it down. All this fiat shenanigans, I feel like it's band-aids on top of band-aids on top of band-aids, trying to fix an already sinking ship or sinking system. But anyways, guys, if you enjoyed the show, you know what to do. Smash that like button. And of course, if you want to continue hearing the catastrophic fiat and shitcoin fails and the Bitcoin news from the perspective, definitely consider subscribing. And we'll see you tomorrow, guys. No, we won't see you tomorrow. We'll see you for the next episode of Simply Bitcoin.
Bitcoin fixes this. Join us.